Good morning, everybody. This is Dennis Wilborn with the Active Trend Traders, and joining me for our first show of the year is David Grandy from All About Trends. Hi, David. How was your Christmas and how was your New Year's?
Both were wonderful. Happy New Year, everybody. It's good to be back here.
Yeah, it is kind of good. I mean, it was kind of nice to have the layoff, but at the same time, it's kind of nice to be coming back to such an exciting stock market, is it not?
It has definitely been that.
Okay. Well, we're going to get right down to business this morning because I know that you've got some good stuff to share. I've got some good stuff to share. I want to remind everybody that all the materials that we do present are for training purposes only, and that traders are always, I'm a big fan of paper trading, and I always suggest to people, and this is one of the only recommendations I ever make, is that that paper trade any new method prior to risk of your own personal capital. And that's an individual decision. Some people like the paper trade, some people don't. I find it very advantageous for learning how to use a new system. I want to remind everybody that the World Money Show is coming up February 5th through the 7th down in Orlando, Florida, and you can sign up. It's a free show. And so you got all these great speakers, including, and these two guys. David and I will be down there presenting the art of trend trading. So if you're in the Orlando area or just going to be coming down for the show, please stop by. We're going to be presenting what day, David?
Saturday, 9 o'clock Eastern Time.
Yeah, 9 o'clock in the morning. So we should be wide awake and bushy-tailed because we're flying in to get over the jet lag, right?
That's right.
Yep. David, do you see my slides?
I don't.
Okay, let's see. Let's see what the issue is. Thank you. You see the slides now?
I don't.
Now
I do.
Now you do. Okay, so you got them back. Thank you very much for letting us know that right off the bat. The only slide I provided prior to this was the disclaimer slide. So just tell me if. So moving along. David and I love to talk about stocks, trading stocks. We love to talk about trend trading. We like to talk about the art of trend trading a lot. And so if you have a group, we would love to either, if you're in the Bay Area, we can, come and actually present to your group live in person. But if you have a group that's anywhere else in the world, we would be glad to present to you guys. And if you would like us to do that, hey, just shoot me an email and we can get that all set up. My email address is right here, dww@activetrendtrading.com. And we're really interested while we're in Orlando, if you are in Orlando with a trading group in Orlando, we would love to come and practice on you guys. No, not practice. We always provide a good professional presentation, but we would love to be able to come over and chat about trend trading. I want to make sure everybody. Now, I just switched slides. Can everybody see the new slide? Market update for the 9th?
Yep.
Hey, Tracy, that's a good question. For us to do a webinar, we do it for free. And basically, I don't charge for my webinars. Do you charge for your webinars, David?
No, we don't.
Yeah, and when we do them together, we also do not charge.
Although, if you want us to take your money, we'll be more than happy to.
Okay. Stop it. Anyway, let's look at the, here's where we left off on the 19th of December. Ho, ho, ho. We were talking about the Santa Claus rally. Wound up getting a pretty nice little Santa Claus rally from the 17th of December all the way through the end of the year. But on New Year's Eve, that was the day before New Year's Eve, the market started selling off, started going to a little bit of a correction. The IBD people put the market in correction and in very quick order it has been reversed, and now it is back in a supposedly a confirmed uptrend. I'll let David talk about that if he wants to. But this week, I kind of categorize the market this week as basically there is little, if any, order to what's going on in the market right now. We've had big downs, we've had big ups. If one is a subscriber to the concept of the January effect, as of right now, the first week in January, the full week of January, will provide a negative January effect. Typically, those that take a look at the January effect are looking at the first 2 weeks of full trading. So we'll see what next week brings. But one of the things I do notice, and the last time we went into correction mode, we were seeing the same type of thing. Let me get my pencil out here. We were seeing the same type of thing here with the daily and the weekly charts and indicators were out of sync with each other. The weeklies are showing that a downturn is likely. The dailies, of course, after several hard days down, are showing that they want to bounce. So, what do I walk away from? When I consider that, I walk away kind of considering, okay, this could be a really sloppy market over the next couple of weeks until we get some order back in it. NASDAQ 100, ditto, weak, but it's weaker than the S&P and the Russell. The Russell is actually doing better, or was doing better than the NASDAQ. The Russell, we'll be taking a look at the chart just here briefly. We have an expanding top with an expanding top, and this, anytime you get an expanding top, it's considered a bearish type of consideration. Now, does it mean we're going to go into a major, 15, 20, 25%, correction? We don't know. I mean, just flat, we don't know that. All we can say is that expanding tops tend to set a bearish tone for the market. One of the things, it makes them really exciting to trade, because as that top expands, the range that, the weekly, the monthly ranges get significantly large. Now, outside influences coming in next week. One, our global, we have weak global markets, and that was one of the reasons why a lot of people are saying that money was flowing into the U.S. market at the end of the year, because we were the only game in town. We have earnings season kicking off here shortly. Excuse me. And then one of the things that I'm going to be trading the charts, but I'm going to also be at least, this is going to be on the back of my mind, and we're going to see if the pullbacks start to look different than what we had over the last 3.5, 4.5 years, where we get a pullback or a correction, but they would tend to be short and shallow. The last two corrections, especially the one that happened back in October of last year, the personality of the pullback was different than those in the preceding 2.5 to 3.5 years. It was much more significant. It was much more violent. And so we'll see if that kind of continues to be the case. It is an interesting time. One of the indicators, of course, that we utilize as part of our triggering, one of the aspects of what we use for our early warning alert system. And then we have some other proprietary type indicators that we're also looking at. But we get basically this bounce off, and this is around the 17th of December here. Fed met, reported out that day, and just rolled out of here and went straight up from the bottom. Failed, even though the S&P, the Russell, was making a new high or getting close to a new high. This failed to make a new high, so we have some negative divergence in this particular indicator. And this week, excuse me, we did not get an alert trigger, because this day here did not close below the 30% of the percentage of stocks above the 20-day moving average on the NYSE. And then what do we get over the last 2 days? We get up day, and now a down day. Now we'll see whether or not that reflects and provides a potential trade to the downside or a potential trade to the upside. Right now we're kind of in what I would categorize as no man's land. This index here is really has become valuable to what we're doing. So let's go to the charts real quick. Tesla, no, we're not want to watch Tesla right now. On the left-hand side is the daily chart. On the right-hand side is the weekly chart. Let's take a real quick look at what we're still looking at. From a daily perspective, we get a really nice bounce off the uptrending channel line, where we had breached that back in October, and this is the correction that happened back in October that I'm talking about. This was different than any of the corrections that we had had prior to that over the last 3.5+ years. And then we get a real quick run-up, violent pullback. This was a significant violent pullback back down to support of the trend line, a rebound back just above its yearly high, and actually a new high for the S&P. And then on, that would have been Tuesday, the day before New Year's Eve, we start rolling over and falling, and we get a bounce this past Tuesday, right off of a strong level of support, and now we're retracing, moving back up, and the question is this going to be a continuation to move back up all the way here, or is this going to reflect a lower high and that we may be going back down this way? But this trend line here, keep your eye on that because it has been holding up well. Keep your eye on this 1990 to 1991 level. It has been holding up well. If those areas are breached, then we may be looking at time to get the Fibonacci's out and start measuring from this high here and see how far down a 10% correction would be, see how far down a 15% correction would be, and just to have in your hip pocket as good information to know. Right now, if we breach and close below the 50, and look how you've got this bunch of moving averages, the 8, the 20, the 50 are all within pennies of each other. If you get a close below this, it would actually be a dark cloud cover on a very short uptrend, which is a bearish indication. NASDAQ. So by next week I should have a new computer, and it will be a little bit quicker than what this one is doing. Hey, NASDAQ did the same bounce from October that from December that the S&P did. We got a nice tradable rally back up to a lower high. It rolled over, came back right back down to the same support zone, did a nice little bounce off of a bullish Harami. However, now it peaked a little bit this morning and is selling off. What I was talking about with both the daily and the weekly charts being out of sync, as you can see here, we got this nice turn up of TSI, you got this nice turn up on the stochastics, a little bit of upswing on the momentum, but it wasn't happening. TSI on a weekly chart still pointing down, negative divergence on a stochastics chart. Momentum for the week is looking like it's a little bit high because the buyers really came in right here at this just below about the 4,100 level. The buyers really came in and popped the index back up. But that's what I'm talking about, where these are divergent. We've got these highs which connect with these highs on the TSI. These highs here are higher than this low where the NASDAQ made a new high. So from an overall standpoint, that tends to have a little bit of a negative tone. Let's take a look at Russell. Russell took us all year to finally break out to new highs, and it did so this day here, really nice run up above the 50-day moving average, ran very rapidly up to break out. As you can see here on the weekly chart, it broke out about above the year's high, but then the breakout failed, and now it is back into it drops back down to the bottom of the Keltner channel, pops back up, and it's will be also considered in no man's land until it makes a decision whether to pop up higher and go back over and challenge these past highs, or if the moving averages fail and we drop back down. But it's got some nice support at both this level, the 1160 level, and then also down here, it looks like about 1155 level. Those are our critical levels. If those are violated with a close below those, then we could be looking at some a little bit more healthy of a correction. So that's what I've got on the markets, David. What do you think?
I think that's spot on, Dennis.
Yeah, and I know like you guys are in, often say that we are in a. It's not so much that it's a stock market as it's a market of stocks, and I agree with that wholeheartedly. So I will swap. You got some charts to look at now?
I do.
Okay, I'm going to switch the presentation over to you.
Okay, great. Thanks a lot, Dennis. Yeah, it definitely is a market of stocks, particularly right now. If you're trying to figure out the stock market, you're probably having a difficult time. I mean, even major financial newspapers are having a tough time with that. Market in correction, and 3 days later, the market's now in a confirmed uptrend, and maybe we're going back into a correction. It's enough to make your head spin. Makes you feel like this year, like a roller coaster. And for us, it's, yeah, we want to pay attention to what the overall market's doing, but we really want to zero in on stocks that have great fundamentals and then are acting very well technically, and use the charts of those stocks to tell us what to do, when to buy, when to take profits, when to stop out, and that's really all that matters for us. So while it's important to go through the indexes, we, it can easily, when you have markets like this, make your head spin, and by staying focused on the charts of leading stocks, it keeps you centered, keeps your emotions in check, and you just simply trade what you see. And that's what our trading plan is. So we don't chase stocks. So when the market is moving up in a big way, we're not going to go out and buy a bunch of stocks that are breaking out. We're going to wait for them to pull back to support, and we're going to buy them at support, and we're going to take profits as they hit a resistance area, and we're going to do the opposite when shorting. So a lot of people, when the market was in a correction earlier this week, how come we're not shorting? And the reason we're not shorting is because the market had already dropped significantly, and the best time to short is when the market falls and a stock both fall through support and then rally back up to an area that used to be support that now acts as resistance. So that may be what we're seeing now is the market, trying to rally here and maybe failing. So we'll see. But anyway, that's our trading plan, and it's working out pretty good. These are the last 7 trades that we've featured and closed, and we have total profits of $28.50 from those 7 trades. So let's talk about some breakouts here. This is data. As you see, it broke out, but it didn't go very far and pulled back to support, bounced nicely, and may end up pulling back here and retesting this low again. But see, if you're buying up here, you're running into a risk of a pullback here. As you see, it went from 80 to 90 in 2 days. So it's normal and healthy for it to digest that gain, which is exactly what it's doing. So we'd rather wait for a stock to break out, then show us a nice orderly pullback, find support at a moving average or lateral support or a trend line, and then move higher. That kind of gives us a confirmation that this stock is ready to go versus just buying a breakout and hoping that it goes through and risk getting stopped out. Here is Virgin America. Again, really nice breakout, but wasn't very long until there's my cursor, until it got sucked into the selling the last week of the year. And as you can see, all it's done is pulled back to where it broke out from, and is trying to make another move higher now. So, just because a breakout fails doesn't mean, okay, we got to throw it away and never look at it again. In fact, we take a lot of stock, no pun intended, in stocks that break out and do well with the breakout initially, because those are the ones that potentially could be the next big winner for us. So, so that's one. And then here's Facebook. This one broke out again immediately, went back into its base, but all it did was pull back to support at this trend line here and the 50-day moving average. So it's very technically sound here. So so that's really the difference between what we do. We are just really patient and wait for stocks to pull back, and we buy them at support versus buying them up here, and then after they've already made, look at Facebook. In 4 days it went from 74 to almost 82. So expecting it to keep on trucking, is asking a little bit, so particularly in this market. So we'd rather just wait for the pullback to support and pick it up then. So I'm going to go through some current examples. Well, those three actually are all on our watch list, and we're just waiting for. Well, we're already in Facebook, and we're waiting for the other two to trigger here. So in the market, just three things you need to know: uptrends and how to trade them, downtrends and how to trade them, and change in trend patterns and how to trade them. And I'm going to talk about the first one and the third one here, because with downtrends, we really need to see every time the market has one of these spillovers to the downside, it almost is always bought, and we always end up going into new highs. And that's how we have to look at the market until we see otherwise. So that's why all of the stocks I'm showing you are going to be on the long side, because we haven't seen the market confirm a downtrend, and it would do that by breaking down and then when it rallies back, not rallying back into new highs, but meeting resistance and then rolling back over. Okay, so this is Sierra Wireless, and now this is a stock that broke out a while back when it had a really stellar earnings report, big gap up here, massive volume on the breakout. Hasn't really given us much of a chance to get into it until now. It's starting to pull back for the first time here, and we just like to see it continue to pull back, get closer to this blue line, and you can see the 50-day moving average and the trend channel support here are not too far from behind either. So we've got multiple levels of support here. So we just need to see, another week or so of this pulling back, and this could be a really good one for us. It's definitely shown that it's worthy of our capital investment because it had this great breakout and it's been acting very well ever since. And but again, rather than buy it here on a gap up and hope it keeps going, we'd rather wait, be patient, wait for it to pull back and give us an alternative low-risk entry point, buying it at support. So that's what we're doing with that one. Now, change in trend patterns. There's a lot of talk about energy. Energy prices obviously have been in a free fall. That's not going to continue forever. At some point, they're going to attempt to make a rally, and there's a lot of really good quality energy stocks out there, good fundamentals that just got caught in the downdraft of the free fall in the energy sector. So when we're looking at stocks that have been in a downtrend for a little while, the first thing we look for is what we call a first thrust up, and this is shown here when it went from like 22 to 28 in 3 days. Now it's pulling back, and it may end up retesting this low again. It may not, but we're really looking for it to form what we call a higher low and then break higher. And that there's a lot of that starting to show up in the energy sector. A lot of these attempts to rally, and now they're just pulling back to test that and maybe set a new uptrend. So we have a lot of those types of trades in our newsletter as well. So that's what we're doing. We're just right now, until the market shows otherwise, we're buying the dips and selling the rips, and we're just taking each of these pullbacks or so-called corrections have almost always ended up being the best time to buy. I mean, if you bought every single time the market went into a correction over the past year and sold every time the market confirmed a new rally, you'd be doing pretty good. And that's why in these types of markets it really favors our system, because buying at support is a lot better than buying breakouts, as I just showed you. When you buy a breakout, you can still get into a great stock and it can still work, but the percentages of that are very low, and they're even lower when you have markets like this where we're up 200 one day and we're down 200 the next day. So again, just use the charts, buy at support. They're lower risk entry points. If the trade doesn't work out and it breaks support, well, you bought only a couple points above support, so your stop loss is going to be very minimal, and it's just a safe way to trade and keep your emotions in check in this market that can really chew people alive emotionally if they don't really have a sound system. So that's what we're doing. If you want to learn more, we do have a 15-day trial. I see a lot of new people on the webinar here today, so I would definitely encourage you to take advantage of that. There's absolutely no credit card or anything needed, just an email, and we'll send you our complete newsletter that our paying subscribers get for free for 15 days, and you'll get to see everything we're doing. We put out a newsletter 6 days a week, and it talks briefly about what's happening in the indexes. We feature trades, and we go through what's happening with the current positions we have, and we also have a watch list of stocks. When a stock on our watch list triggers a trade, we send you an email telling you that we're buying so many shares of this stock at such a price, and we do the same when we're locking in gains or if it gets stopped out. So we spend a lot of time educating you on the systems that I just went through. We give you real examples, and we make it easy for you to trade in tandem with us, even if you want to just do it on paper, which we would highly encourage if you just get started with us. So I think that's it.
Hey, David, great job. And it is so awesome. And I want to remind everybody that it may seem a little bit odd, but David and I are not with the same company. David represents All About Trends, and then I represent the Active Trend Traders. We do things slightly differently. And we do things a little bit differently. I know that and the offerings are a little bit different. We occasionally do a combo offering with the subscription. We're going to talk about doing one of those in the near future, David. Because we have done those in the past and people tend to like them. But David and I just got together almost a year ago now and just said, hey, why don't we just join forces, and because we both love to talk to people about stocks, we'll just combine our efforts. And then I know it doesn't bother, if people subscribe with David, it doesn't bother me. If people subscribe with me, I know it doesn't bother David, because basically our ultimate objective is that everybody become a master trader. I know that's where with Active Trend Traders we really focus a lot on investment. Hey, I read a real quick question I'm going to answer right now. People are asking about the expanding top within an expanding top on the Russell. Well, as you can see here, I'm going to draw this line in here. This is an expanding top. It's kind of a flat expanding top because the top is basically kind of flat. But you see how it keeps. Let me slow down. See how you start getting these lower lows. And so if we get a failure here, where is it potentially going to go in the Russell? Well, back down to this movie, this trend line. Now what I'm saying about, so that's the larger picture, and then go back over to the daily chart, and what we've got here is we've got this top here, or this trend line there, and this trend line here. Therefore, an expanding top within an expanding top within an expanding top. That same top is here, You can see it there on on the weekly chart. So that's what that was about. There was another question. And Dave, there's a question. Have you done any trades in 2015? I know you've done the. Can you hear me now?
I can hear you just fine.
Okay.
Yeah, we've just done a couple trades, and that's one thing I meant to say is take it easy in this market. There's no reason to rush out and do 300 trades. I think the market's in a new uptrend. I'm going to go buy stocks. If you did that today, you probably don't have much to show for it.
Yeah.
So we're just taking it easy. We already have 6 or 7 existing open positions right now. So
yeah, did you carry over some positions from 2014?
Yeah, we carried over quite a few.
Okay, yeah, because I basically entered 2015 flat the market, and we're just waiting for. Had a lot of stuff going over the holiday, going on over the holidays, so wanted to be just flat protection, because you always have to remember that cash is a position also, right?
Yeah, we are rarely more than 50% invested, so that's a big thing. In addition to just watching the charts and letting that guide your trading versus the emotions, we also practice trade size risk management. We don't do more than 5 to 7% of our portfolio in any one position, and we do that because if a stock that we own goes down 10%, let's say, and we only have 5% of our portfolio there, it's 1% of our portfolio that's impacted by that if it goes down 10%, which is rare that happens. And then the second thing is we're rarely more than 50% invested. There's just no reason to go out and be fully invested, particularly in this market right now.
Yeah, I agree wholeheartedly. Yeah, this market, as I basically chatted with folks in the Active Trend Trading Traders Report this past weekend, that now is the time to not be going nuts in the market, like you said. And this type of market lends itself to picking things up off of support and then taking your profits quickly. And taking your profits quickly, and I'll be showing you, one of our suggested trades, or not suggested trades. One of the things I traded, because with Active Trend Trading, people have a choice to trade with us. Here it is, right here. How have we done so far? This is our first pick of the year. And what I practice with the Active Trend Trading is when we hit a level of technical, when we hit a level of technical resistance, go ahead and take a little bit of profit off the table, because what so often happens, especially in this kind of market, sometimes it hits that resistance and breaks through, but other times in this type of market it can tend to not break through and break down, and all of a sudden a nice little, in this case, we took a 6.4% profit off when AMBA hit 55, and we just said, hey, we're just going to pocket that. So we sold 100 shares this morning. We'll take a look at the chart of AMBA just a little bit to give you how we got into this. And okay, we're in at 51.67. This morning it popped and topped out at 62 and some change. Well, that put it 22% above its 20-day moving average. That tends to be a range where the price action will do a reversion to the mean, and it would still be a profitable trade, but we just said, okay, if it's going to revert here, let's go ahead and take a little bit more profit off the table. We did, so we sold 50 shares this morning for a gain of 18%. All of our premium members each week, we provide select IBD quality stocks that are highlighted to either go up, down, or in some cases it's a toss-up. We don't, where it could go either way because the stock is in no man's land. And we concentrate on typically a handful of stocks each week, and sometimes it's the same stock. How do we do? So here's how we're doing this year so far, running results as of today. So picked up about 820. How did we do last year? In our margin account, we were up 28%. In the IRA account, 55%. Our 3-year compounded growth for the margin account is 126%. Where our objective and goal is to hit 60% winning trades with a return of about 40% per year. So for the active trend trading, our objectives are to provide a clear, simple trading system for busy people. That's where we do our portfolio planning a little bit, different than Dave. We can be into 5 stocks. That's all we go into, and that's typically 4 stocks and 1 ETF, and that can be fully invested if the market lends itself to that. Some of the things that we've added to the service over the last few weeks is the early warning alerts for just trading index ETFs, free text alerts for both premium and early warning alert members. And we've worked hard as we've put together over the past 10 years, put the active trend trading system together to develop, to develop a system that equips traders who are still working for a living with a system that works well in any market condition. And so for how to make money trading stock attendees, you can email me for a special membership offer. I'll give you some of the discount on that. And we also have a free newsletter. Some of you are members to that, and we really appreciate your membership, and I know David does also. And so that's all I have for the main part, David, and I know you do also. We've got a couple of questions on some of the trades, but we will see you next week for the market update, and we just encourage everybody, keep your egg, keep growing the egg. That's what's critical. It's going to be a very interesting, challenging, and exciting 2015. And I'm feeling good, David, about how, coming out of the blocks in 2015. It's always nice to start with some winning trades, and now we'll, continue to push the envelope. Here's David's contact. Please call David at 408-627-3435, because David will answer your phone call, right, Dave?
That's correct. Absolutely. I love talking about stocks.
Yeah, and you can reach me at 808-366-0397. For those of you who are in the know, yes, 808 is a Hawaii number because that's where my mobile phone is and that's where my heart is, even though my butt is in California. So that's all we have for today. Trade wisely, trade profitably, and now let's look at some stocks. So David, let's see, let me expand this. So, okay, glad you're doing AMD. I was going to ask you for that. Would you short the market here, or would you wait for clear confirmation of a downtrend? That's a great question, Mark. Right now, we do not have a confirmation of a downtrend. Longer term, the market is still in a strong uptrend. I would look for some indication. Let me go to the chart real quick. I would be looking for, and we'll come back to AM because people wanted to ask some questions about AMBA. Just let's take a look at the SPX really quick. Topping is a process. And we've got to be looking both on a daily chart and a weekly chart to understand that process as it's going on. As we see, we've got strong resistance up here in the 2090 to 2100 level on the S&P, and it may just chew around here in a trading range throughout 2015. We don't know. Normally, years that end with 5 tend to be, there's a bias towards years that end with 5, for whatever reason, the market being up. And so we'll see if how that plays out. But on and if you look over here, okay, here's where we finished 2014 here, and we're just slightly below that. But from the January effect, so we're slightly below that, and so I could see the year kind of going, it would really not be very pleasant, But I could see this year kind of turn into a meat grinder kind of thing where we're going from support to resistance, from support to resistance. And so learning how to trade in that environment is going to be very important to you and getting the proper notes. So that answers Mike's question. Let's go back to that AMBA, Dave. And Dave, here's some stocks that people are asking about. ILMN.
Yeah, let me just add a couple of things to that too. I mean, if you tried to short the market every time that the markets had these hiccups or corrections, whatever you want to call them, I mean, you've got blown out. I mean, we had the S&P went up 100 points in 3 days. To what, 2 weeks ago?
Yeah, exactly.
So there are some shorts that are working, like Netflix and Priceline, but they're few and far between, and particularly in stocks like that, you can really get hurt pretty quickly with the indexes decide to get up and go.
Yeah, and another good one that was a good short, like the first couple of days of this year was Amazon.
Yeah.
And but as far as shorting the index, and as far as shorting the index, I'm not ready to do that yet. Of course, I will go to a intraday chart, hourly intraday chart, but I'm going to be watching right here on SPX as long as it is up. But I'll be watching here. Do we come back and close below that? And which that in turn continues to hammer these moving averages down. Get a fresh, right now we have a cross of the 8 below the 20. And so we're getting this moving average squeeze. And when you get that and price is just sitting right on top of it, we don't know which way it's going to go. Therefore, that's why I call that no man's land, because the buyers and sellers haven't really given us a clear signal that we're taking it up or we're taking it down. And so I hope that helps. Dave, here's some of the stocks. ILMN. Excuse me, AVGO. You have those?
Yep, I got both those.
Okay, and I'm going to go over AMBA really quick here. This popped onto our, we've been watching AMBA for quite a while, and that's one of the things that we like to practice. We like to practice, one, being patient with the stocks, because we were watching AMBA actually back in this area here and got chewed out of some trades in this area where it was coming up and bottoming and then popping back up, and also watched it again here. Well, we saw that it was setting up a similar pattern this past week, and so as it was trailing down here and holding this uptrending line, on Friday of last week we had a hammer go in. So a hammer is a bullish reversal signal based on Japanese candlesticks, that as long as the hammer and the wick stay in, are not violated, then that is a valid reversal signal. We took a trade at 51.67 on the 5th as it was hammering up against the 8-day moving average, and we got a nice breakout. We got a pop up the next day and then a breakout the next day. And here's where I was talking about. Here, this 55 level where this downtrending line was, that was a level of resistance where it makes sense to pull some profits off the table. So we pulled some profits off the table at 55. And then, as David said, yeah, he was looking at, he had to go to a luncheon or something, and it was sitting down here at about $56, and the next thing he knows, it's up here at 60 at the end of the day. I mean, none of us forecast that happening. The next day, it it held, and today it breaks out again. And so based on this breakout today, what we did was basically take a look and say, okay, here's the 20 moving average. I just measured up from that. And as you can see, at the high today, it was up 21.8% above the 20-day moving average. So normally that's a good place for stocks to want to have a reversion to the mean and pull back down. And it slowed down a little bit. So we went ahead and took another bit of profit to about 17% off on this stock. We still have a piece left. I want to build a position in AMBA, so what I'd be looking for is pullback to a moving average. Hopefully these are coming this way. Then pullback, bounce, pullback, bounce. So that's what I'm looking at for AMBA. I know some of the active trend traders traded this and were able to pull in some profit first thing of the year. So that's awesome. So David, do you have those stocks?
Yep, I do.
I am switching over to you, and I'll pull up some of the other ones.
Okay, so Avago, it's the same thing. Which type of person are you? If you want to buy a breakout, then today is your day. It's trying to break out. If you would rather buy stocks at support, the time to buy it was on Monday or Tuesday as it pulled back to support. I mean, this is a perfect example of what we're talking about. Here's a breakout here, and it went up, and now for the first time it's pulling back to the support of the 50-day moving average since breaking out. So this is an ideal entry point for us versus chasing it here. So that's the difference with that. Now, the other one was IOMN.
Yeah.
And same thing, trying to break out. But, I mean, I don't know. With IOMN, my personal thing is I'm just kind of getting tired of hearing about it. It just seems like a stock that's kind of old news now. It's already made a pretty big run. If you buy it here, yeah, sure, it could still go up, but maybe it's better off to put your money in newer issues that aren't kind of obvious to everybody out there right now. That's how I feel about it personally. But looking at the chart, same thing. You know, it's already made a pretty decent move here a couple of days, and I'd rather buy it on a pullback to support. So if it does break out here, let's see how the breakout does. Let's see if it can put on some gains and then pull back, and then we can take a look at it.
So, okay, Dave, what about that? Do you have, let me see, what do you got? AGIO.
I don't think I have that one.
Okay, I'll take a look at that one. One of the other things, Dave, that's always a good idea is when you have the, the chart like the ILMN chart, is take a look at that on a weekly basis also. And if it's showing that it's been in just a huge move for over a year period of time, a year to 2 years, and has run up really hard. I'm not going to say it's not a great stock. It may be an awesome stock. It may continue to run up hard, but at some time all stocks will take a rest. And so, hey, do you have...
Plus, the further extended it is, the less you're most likely going to get if you were to buy a breakout. The breakouts tend to not go as far as the earlier breakouts do. So
yes.
So for me, it's just like, well, why should I put my money in this when the odds are that aren't as good as they would be if I found a newer issue that isn't being written about every day.
Yeah. No, I agree wholeheartedly. So let me check the time here. We've got a couple more minutes. Let me pop back. David, do you have Michael? Was that BIB or BIIB? I know you have BIIB, don't you, Dave? You get that one up, and I'll pop back over and take a look at a couple of.
Okay, which one was it? BIIB.
I think it's I think it's BIIB. And so.
Yeah, Biogen.
Oh no, this is that's Leveraged Biotech, BIB, and you may not have that one.
I don't have that.
Okay, yeah. Okay. Here's my chart on AGIO. It's an ETF. Okay, thanks, Mike. Yeah, it looks like it's breaking out. Volume is not going up as the price is going up, which is kind of interesting. It's a little bit below average on its volume. It's a pharmaceutical. It has, this is where I'm looking at here, it's a fairly new issue. Came and has made a tremendous run from last year. I mean, it's already up, 231% from last year. right now. But I do like its range and its scale, and that this black line here is a 10% envelope around the 20-day moving average. Up here it is a 25% on a weekly chart. So it's got some really nice scale that it's operating over that. At the same time, it is extended, so I would anticipate a potential reversion at some point to the 20-week moving average in XPI. XPI. This one I'm not familiar with. Yes, are you familiar with this one, Dave?
Yeah, and XPI. I mean, these are all the same things that all these stocks that we're looking at here are all breaking out today.
Yeah.
So they're all the same. So the question is, do you want to take the breakout and run the risk of a pullback, particularly in this market, or would you rather wait for it to pull back and buy it at support?
Yeah.
I mean, there's no right or wrong answer. You have to decide what type of trader, what type of investor you are. That's the first thing to having a trading plan. But that's what all these stocks have in common.
No, you're absolutely right. Let me take a look at VIB. Yeah, Michael, VIB I wouldn't touch simply because it's the interest in it appears to be quite low. It trades less than an average of 286,000 shares per day, and so I think that there are other potential ETFs out there that could do probably do better. And again, that low level of volume. Well, let me see, did I have that in there correctly? No, yeah. That low level of volume. I'm not going to say it's not a good ETF because clearly it's got some good range, it's got some good trajectory, it's got some good patterns. But I think there's other games in town for me. So let's take a look at. Do you have ZLTQ?
Same thing. Trying to break out today. I mean, I can tell you right where that. I'm kind of mad because the day to take it was yesterday when it peaked back above the 50-day and 10-day.
Yeah. Well,
some decent volume, and now it's falling through and trying to break out today.
I agree, David, and that's where I think one of the things that folks can learn, and I basically say this all the time, and we do this in our training sessions on Wednesday nights with the active trend traders, is that I'm looking for these bounces from the levels of support, like either down at the bottom of the Keltner channel, or when you're getting this confirmation coming back up to the 20 and the 50, and now it broke above the 8, the 50, where you get these combinations, you get this final breakout. Because look what's happening, and I think that you get a breakout. You get a nice strong breakout this morning on this stock, but look what's happened. It broke out, and then that breakout may, and I'm not going to say absolutely for sure, but I'm going to say it may be failing immediately because that's where the sellers came in. The sellers came in and pushed the price of the stock back down.
Yeah, but the difference is I would rather have this stock than IOMN because this is a newer stock. It's not being written about in IBD every day.
Yeah.
And it's a new issue. It's in the early stages of its run. So it's just a matter of, okay, this stock is on my radar screen. Now where do I pick it up at?
Oh, exactly. Yeah. And
I'm not going to buy it here. I wish I'd bought it yesterday, honestly. But so now I just have to wait for it to give me another shot, and it will, because all stocks will eventually pull back to support at some point.
Yeah, exactly. Talk about stocks trying to pull back, being challenged with their breakouts. Again, BITA. Yeah, BITA was on my kind of my list to watch this week, and it was overtaken by AMBA and the trade on that. But look at where it's doing this nice little convergence here. It has had pulled back from a significant, but I looked long term. It had pulled, its longer term uptrend was still in effect. It had pulled back to support about 70, and then it started working higher, and then gets these gap ups. And so this was January 2nd. Last Friday was the day, either Friday or Tuesday, when we did this little pullback to the moving averages. That was a great place to enter that. However, once it's broken out, where did it go? Right back up to a resistance level. Here, I'll draw this over on the weekly chart. Up into maybe I'll draw it on the weekly chart. Back up to a resistance level. Look what happens over on the daily charts. Right back into strong overhead support, or strong overhead resistance. This is where the supply is, and it is selling off. And it's sold off from 95 this morning down almost to 85. This would be considered definitely a shooting star, which is a bearish type indication. Now, where's it going to go? Don't know. And it could basically just go back down here to about 80, or it could go lower. But that is a concern. Or it could be a triple top type forming, which is a very negative sign. So let me look here, David. I think we covered everything that people ask about. See if you bought at 20-day moving average. So hold on a second. CLTQ. Yeah, if you bought down here at the 20-day moving average, again, it's one of those situations where if you bought at the 20 here, well, by the time it got back up to the resistance, which it's fallen back down below, you had about 5% into the trade. Do you want to take your profits there, or take not all the profits, but just take a little bit off the table? Or do you want to just see what's going to happen? Will the trade play out? That's a decision, as David said, about deciding which kind of a trader you're going to be. Take a little bit of profits here, or let it, see if it's going to continue to bounce, and because you can draw a nice little trend line up that way, and see what's going to happen. Let's see. Do you have PFE, David?
PFE?
Yeah.
No.
RAD? R-A-D?
Nope.
No? And I don't know if this is available on, okay, go look it up. ARWR. Yeah, David Avery, the $ ARWR does not come up. You got a ticker there for us, Bill? David, what is $? I know it's an index of some sort, or but $ ARWR, Arrowhead. Okay, it's a biotech. There we go. I thought Arrowhead was water. No, it's hidden over here somewhere. Now somewhere, hold on just a second. I'm operating on two screens, and sometimes the one screen pops up. There we go. And on one side, so AW. Well, one thing is it's got good volume, but just taking a look at this, it's a volatile puppy, and it probably would not qualify as one of my IBD quality stocks. I would have to take a look at it I'd have to do a stock checkup on it to see what it has to offer. From a purely tradable standpoint, yeah, I mean, this is some really nice moves on a low dollar amount stock, but this is one heck of a ride from 26 all the way down to 6. Okay. David, what do you think about this one, David?
This looks more like what I was talking about with the energy stocks, with
Yeah.
the change in trend patterns from down to up. So I'd like to see, it's made a nice little first thrust up here. I'd like to see it pull back a little bit and make that higher low.
Yeah. Rite Aid, again, I'd have to do the market, the stock checkup on this to see if it would be worthy of putting it onto a watch list. I other than knowing it's a not a drug company, but what do you call it, drugstore company, or it used to be drug retails. So a couple of stocks I will throw out there to everybody that have been looking interesting over the last couple of weeks is this one, YY. It looks like it is, except today, of course. It had done a really nice consolidation down here, broken out, got a 820 crossover, has come up to a resistance level at the 50-day moving average. We'll see if it continues to consolidate here, because this got a really nice breakout, did the run to where we would think it was, and that's about a 10% run, very short period of time. And then also, Kihu was also looking a little bit positive in that it's basing right now. Now it could continue to fall down, but we've got a weekly hammer here following a weekly hammer, and so it looks like it's trying. This is where I look at the longer term picture of the stock to say, okay, overall from in this 2-year period of time, it is still, I won't say it's not still in an uptrend, but it's still looking for a place to base, and it may have to get all the way down here to about the 45 level, or it may do a turn right here, but it may be an early stage of consolidation, because this consolidation here is a little bit different than what we had here, where you got a bounce. So well worth taking a look at, or keeping an eye on. So, okay, anybody else? Noah, yeah. Here, take a look real quick at Coop.
Yeah, Noah's a good example of a stock that broke out and pulled back, and
yeah,
seems to be.
Do you have Noah?
I don't have it, but I can.
Okay.
I know the chart.
Okay, yeah,
So,
I know.
It's a perfect example of what we're talking about. It broke out, and then it pulled back, and then was making a nice move from it the last I checked.
Yeah, and coupons.com, I would have to, again, I haven't seen it on any of the IBD list, and so I basically don't know anything about it. It's got pretty good range. I'm not crazy about the patterns, but weekly patterns I like better than the daily patterns, and so
I can throw up Noah if you want.
Or, ew, it's continuing to sell off, David. No, it is.
Oh, yeah, having a bad day today.
Yeah.
Well, it was doing good.
Yeah, because I got an email yesterday about NOAA being comparable to AMBA, and yeah, it was looking pretty good here on this little hammer, Dragonfly Doji there hammer, and then we break back up. But look what happened. It tried to stick its head above this downtrending resistance line, and today we're getting this is a good sell-off on what appears to be some increasing selling volume. If we close,
yeah, I mean, the reason I haven't done it is because it's just so volatile.
Yeah.
I mean, when it goes from 25 down to 18 in a week,
yeah,
no thanks.
Yeah,
There's other things out there I'd rather play with.
And this action right here, with those big sell-off days, like we see here, this is a clue to what may be happening over here, because we get this kind of like just very bashful kind of, rally back up into a level, and look where it rallies to. It rallies right up into the midsection of that large candle. That large candle there is what's happening here. But that large candle on the weekly chart, it rallies right back up into half of it and then sells off. And so this may, for me, this might become interesting down in this level if it puts in some kind of a consolidation. And so, yeah, somebody indicated that no, IBD actually wrote an article that talks about the volatility. So, folks, we are
I mean, stocks like this that have these wild ranges and even just intraday ranges. I mean, I don't know about you, but I'm not getting any younger. I don't want to be stressed out all day long.
Yeah.
Trying to babysit a stock. So I mean, to me, there's better things out there to trade a lot tighter and a lot more predictable.
Yeah.
Than this one.
I agree wholeheartedly. So, hey, with that, guys, we are going to call it a day. We are gone past our hour slightly. I want to thank everybody for showing up today, and this recording will be up probably within the next couple of hours. So have a happy new year. Look forward to an absolutely fantastic 2015. David, working with you and Harlan, and he's away, and it is his birthday today, so we want to say happy birthday to Harlan.